Everybody's doing pretty good. Just pardon the noise. I'm not quite sure because a bit windy on my side and it's boiling, so I'm just outside, right? But yeah, in regards to today's price action, right? Or better yet, yesterday's price action, which was the 6th of December 2024, right? We had non-farm payroll, right? I personally, within this range, was more focused on ES to be ideally specific, right? It was just an easier read for me, right? Simply off the fact that we had cleaner data. It's not the cleanest, it's not the cleanest, right? But we had cleaner data, right? And yesterday or the day before, I ideally mentioned that when you are expecting or anticipating 8:30 news, right, you need to ideally refer to 6 a.m. on the 3 hour time frame, right? Because 6 a.m., right, which is this candle right here, 6 a.m. is gonna be simply the Q3 of news, right? This is like Q2 of Q2 to ideally say the least, right? To explain it in the easiest of ways, right? Let me just add this right here, right? Okay, guys, one thing you guys need to understand, right, in regards to, okay, one thing you guys need to ideally understand in regards to time, right, is price and time is ideally being referred to continuously based on the candle, right? Not inefficiency, right? Meaning, when we, okay, this thing just turned on the AC. Okay, when we have executive candles like this, right? I'm gonna mark this out like this and then just hide this for now, right? Let's make it full screen. Gonna hide that for now, right? Okay, 1, 2, right? And then we're gonna move this to the side. Move this to the side, like this, right? Then here we're gonna have something like this. And then here we're gonna have something like this, right? Okay, guys, one thing you need to understand about this ranges, right? We'll say this is the, I explained this in courses, right? But we're still gonna be utilizing time, right? Because I found that explaining quarterly cycles is ideally an easier way to articulate this, right? Okay, one last one. 14. Okay, let's say this is ideally the same day, right? We'll just say it is today. Does not matter what today is at your today, it's today, right? If it's Sunday, it's Sunday. We'll just pretend that the markets run on a Sunday or whatever, right? This, and this are ideally the exact same thing, right? The only difference is one is going to be cleaner than the others, right? The first one we have is right here, right? We have a clear time-based imbalance right there, right? A clear one, right? And then right here we have a clear implied fair value gap, right? Then right here we have jaggedness, messiness, right? You can't even find anything, right? Okay. One thing you need to understand, right? The way we want to utilize these PRAs, right? We just utilize them to ideally help us focus on what is more crucial than not, right? What is more obvious than not, right? Meaning this Q3, this Q3, and this Q3 will ideally hold the exact same value, even though this one has a imbalance. This one has an implied imbalance, and this one is just overlapping wicks, right? They are gonna ideally hold the exact same characteristics, meaning if price, all right, let's move this something like this. Let's move this. Let's move this, right? Then we add an orange, right? We'll make it blue, right? Then we'll call it 2Q3, right? Then we'll make this internal range white, right? That means now, when price within a similar time, which is Q3, right, draws to this imbalance, right, we have an easier understanding, or we have an easier ability of identifying where price is specifically going to within this quarter, because the imbalance is just the refinement of where price is going to go, right? It goes to it, it reacts, right? This inefficiency, this fair value gap, right, from a price perspective, we are utilizing it to help us focus on where we should be ideally focusing. That's why conditions where there are no wicks, there are no inefficiencies such as fair value, right, it's going to be a bit harder to read because you won't even know which specific candle you're going to focus on, right? But price will still do what it does. Price draws to the Q3 candle, right? Not the fair value gap. It's referring to the candle and then react, right? Sometimes you'll even see price just opens, right, touches the high of the candle and then react. You understand? Sometimes it opens, touches just the wick below, and then react. You understand? It's referring to the candle, right? But within the candle, the precision point, the main reference or focus point will be the inefficiency, the gap. You understand? This nature right here, right, is ideally put it like this. This nature right here is ideally the same even when we have an implied fair value gap, right? Implied fair value gap, where price just draws into the candle and then reacts. You understand? Anywhere within the candle, you can expect a reaction. But the fact that price, just know that price is ideally referring to the candle range. You understand? It's the same with overlapping wicks, where there's no clarity, right? What price will simply do is open, then draw into this candle, right? But what's ideally going to make it very difficult to read with this specific candle, right, is the wideness of it, because price will be referring to large ranges within it, whereby price just digs in, right? Can probably go this low and then react, right? Well, let's say right here, right, within this Q3, this is the current day Q3 and this is the previous day Q3, right? This is a 3-hour candle on the 3-hour time frame, and then this is the 3-hour candle on the 3-hour time frame, right? And we have 9:30 right there, meaning within this candle between this high and this low, 9:30 is within that range, right? Price at 9:30 will ideally draw, or you expect price to draw to that specific candle and then react at 9:30. That's ideally what I'm referring to when I'm saying refinements. You understand? Refinements. For example, we can say this 9:30 is a 9:30 of what time frame? The 15-minute time frame. You understand? And then if you do further refinements, you find that the 5-minute time frame 9:30 is just right below it, and then the 1 minute time frame is just right within it, right? That looks a bit off, but I just make it a dark line without text, right? Something like this. That's what price is drawing to, right? Most of the time you'll see the ones on low time frame left as breakaways, right? That means price does not have enough time to get there. A little way I would anticipate that, right, is by using shifted PD arrays, meaning I'm doing internal standard deviations. I'll show you this, right? Okay. Right now I'm just gonna go to
Once you start, you don't stop. Even in this game, once you cook one, you don't stop. All you need to do is cook one, no matter how.
okay. Now let us go back into the live chart, right? I'm on the 3 hour time frame, right? I'm explaining this on 3 hours, right? You should be able to fractalize this all the way to lower time frame, right? This candle, this specific candle that formed is 3 a.m., right? This one is 6 a.m. Notice we had our largest expansion at what time? At 6 a.m., right? What did we have at 6 a.m.? Firstly, this is ideally how you'd want to approach it, right? Firstly, the day, right? The day. It's Friday, right? And what did we have on Friday? Event. Event. What event was it? NFP, right? What time? 8:30, right? So what does that hint to you? That 8:30 has the highest probability of being the expansion of the day, meaning has the highest of being the highest probability of being the expansion of the day, meaning that's going to be ideally the true move. That's going to be where most of the volume is going to be, right? Because NFP is a very influential grateful news event, right? After NFP, what do we have? We have the 0930 open. What do you want to see this as? Second stage. Yeah, spelling's gone off the charts. Second stage distribution. You understand? Meaning it should be ideally within confluence with that already existing expansion of the day, right? With me personally, I used to get like hurt a lot of times when I was trying to expect the 9:30 to be the reversal of the 8:30, right? But for this to ideally be in play, right, 9:30 needs to be reacting off 9 a.m., right, on the 3 hours. So what does that mean? What ideally confirms 8:30 as the true expansion of the day, right? It is the 6 a.m. candle, right, within the 3 hour. Can I undo that? Okay. What confirms it is the 6 a.m. candle, right, on the 3-hour time frame, right? This is gonna be an easy read. I'm not gonna be including any other time frames, right? This is gonna be as basic as I can explain it, right? What does that mean, right? I want to see if, I don't know if they exist. Candle. Okay, no, not that. Okay. Okay, I'll probably have to code something for that, right? But yeah, firstly, you need to pay very close attention to the time, right? I'll make this orange, right? This is the candle I'm talking about on the 3-hour time frame. When this candle opens, this candle is gonna be running for a full 3 hours, meaning on the 3-hour time frame, right? The 6 a.m. candle will begin at 6 a.m., right? A.m., right? And ends in 3 hours time, right? Which is ideally gonna be, right, plus 3 hours. Yeah, I'm typing nonsense, right? Which is gonna be what time? 09, right? Then this 9 candle is gonna be for 9:30. You understand? The 6-hour candle, this one is gonna be for what time? 8:30. So when there's 8:30 news, right, you focus on the 6 candle, right? When it's 9:30, you focus on the 9. When it's 10, you're gonna focus on the 9, 2 on the 3 hours, right? And then when we have FOMC, which is ideally gonna be from 1, you're gonna focus on the 12. You understand? You can fractalize this for each and every time frame, or each and every red folder news event that ideally is available on Forex Factory, right? For any asset class, right? So this ideally what you're looking for, right? So right now you want to mark out the closest proximity range, right? Meaning this candle and this candle right here, these two candles, right? They are gonna be your main reference for this day, right? Simply because you do not have any other data, right? That means now you need to refer to these two candles, right? Meaning you are within time distortion, right? Between these two 6 a.m. candles. Between time distortion between these two 6 a.m. candles, right? Meaning price is gonna either hop from one to the other. Price is gonna be continuously referring to both. You understand? One is gonna be a premium, one is gonna be a discount, right? Within them is time distortion, right? But you're trading from one to the other. You understand? So when you have 8:30 red folder news events, right? It's ideally simple. Just refine this until you find an 8:30 candle, right? 8:30 candle, meaning you can start from the 45, the 30, the 15. Does not really matter. They are ideally all the same time frame, right? So now let's go to the 15-minute time frame. It's taking its sweet time, right? Okay. I've coded this right here. I'll make it outline 8:30, right? From the last, because it's ideally getting very tedious. Right, let me just make it. Okay, right here, just pardon the noise, right? I need to fix this. Okay, let me just manually mark it, right? So, right now, that ideally means the 6-hour candle begins right here. And this 6-hour candle begins right there. The one for the current date begins right there, right? Now you need to add 3 hours from this. You can utilize this from here, 3 hours, right? Which is ideally here. You understand? So now that means this is your dealing range. Excuse me. Same way right here. This is your dealing range. Same way right there. This is your dealing range right there, right? So what does that mean? The 3-hour candle was ideally just this range right here, this range right here, and then this was just this range right here. You understand? Can extend this like this, just like this, right? Okay, now what are you looking for within both these ranges? Simple. An 8, excuse me, an 8:30 candle. Why? Because we had 8:30 red folder news events, which is NFP. You understand? Within this specific ranges right here and right there. You understand? Before you can look for anything else, this is where you're looking, right? Simple, basic. You understand? This is just basically me showing you how I ideally approach when I'm trading 9:30 and 8:30. This is all I'm pretty much doing, right? I'm not looking for any SMTs, any market correlations. I'm just looking at this from like the cleanest one, right? It just gets a bit more advanced when these ones are not present at the time, right? But this is the base blueprint of what I'm ideally looking for, right? Every single time, right? Just make this I mark them in blue, right? So what does that mean now? Now we need to look for the 8:30 candles within both of these ranges. You understand? This is still a work in progress, right? But it should ideally work for the work that we are ideally looking for. Right here. Can you see this candle right here? This is 8:30. Can you see this candle right here? Damn, this wind. This is 8:30. Price was down here at 8:30. You understand? I can mark this range out like this. Mark it in orange, right? Then I can mark out this range. Then mark it out in orange, right? Okay, so now the question is, if price was gonna react, which one would it ideally utilize between this one and this one? It's gonna use the one that's closest in proximity, which is this one right here, right? It uses this 8:30 to do what? To seek higher prices right there. What time is this? That's 8:30. You understand? So if I do this, mark this with the gray color, and then have this set as 8:30, right? This is when our news injection hits, right? That's the exact same time right there, right? That's the exact same time, which is 8:30 for 8:30. This is what we call coloring outside the lines, right? This will often happen when you're trading NFP. right? It's like a seek and destroy type of nature, but it's not gonna be allowed to go any further. You understand? Meaning the only way price would have went bearish right here was if this P area was not present. You understand? Guys, the easier trades, right, are gonna be when your executions are a fixed 24-hour difference, right, from the previous day, right, which is gonna be 48 for 2 days, which from here to right here, that is a full 48, I believe. 2 days, which is 48 hours. You understand? This is ideal how price refers to itself. You understand? The exact same way we have this right here, you could have utilized it right there. So guys, with me, when I'm usually taking executions, right? When I'm usually taking executions before like 9:30, right? In this case, we'll use 8:30. Let's say I took the execution at 8:15, which would be this time right here, right? All I'm simply referring to is an 8:15 candle. That means when price touched it right there, I would go long and expect this to be a continuation. But I'll make sure my stop covers for both 8:30 and 8:30 and no, for both 8:15, which is this candle, right, and 8:30, meaning it needs to be below both of them, right? With NFP, you'd most likely be stopped outright. This is ideally the nature. So if you're gonna trade news, you're gonna have to, I don't condone it, right? You're gonna have to be very selective with the news you trade, right? I would say avoid doing this with NFP, right? With CPI, though it's crazy too, right? CPI, right? PPI, these ones are ideally gonna be also highly influential, right? But you wanna, those ones you can allow yourself, right, just reduce risk, because if volume is influenced by manual intervention, it's gonna, your stop is not gonna protect you. Same way if I went long right here, right, and I placed my stop right down there, I would have been taken out down there. You understand? Meaning I would have lost way more than I was anticipating, way more than I was actually comfortable with, if that makes sense, right? But yeah, this is ideally the breakdown in regards to how I would utilize these P arrays, right? When they are left as breakaways, right, which ideally happened, it's the exact same nature with Nasdaq, right? Meaning if I go to the 3 hours, right, and I go to the 6-hour candle right there, right? You have a 6-hour candle. Notice we don't have any imbalance, right? The 6-hour candle is a P array on its own. It's a time-based candle. You understand? The highs and lows, these are just rejection blocks. You understand? If there was a fair value gap, that would be the precision point. That would be the main focus area of where price would ideally react, right? So this is right there, right? And then this is right there. That is 6 a.m. On low time frames, it's gonna be 8. But yeah, I'll mark that when we get there, right? Let me just right there. We have a 6-hour candle. We have a 6 a.m. candle at 3 a.m. on the 3-hour chart, I mean, right? And right here we have the rejection candle, and in between we have, what is this? The one above. Price was closest to this one, so ideally refer to this one to target that one. You understand? Keep it very simple and stupid. Ignore everything outside. You understand? Price at 6 a.m. is going to be reacting off 6 a.m. candles. Price at 9 a.m. is going to be referring at 9 a.m. candles. Price is always going to be referring back 24 hours. You multiply by the 248, and then add another day, I think it's 72, so forth and so on, right? Those are going to be the cleaner setups when they are like a full 24-hour behind. You understand? Hopefully everything is making sense. You might have to watch this a couple of times, right? But yeah, What do I look for? We have news at what time? 8:30. You understand? So what does that mean? I'm looking for a 6 a.m. candle. What am I looking for then? I'm looking for an 8:30 candle within the 6 a.m. candle on the 3-hour time frame. I can go to the 15-minute time frame and mark that out. You understand? 6 to 9. This is a full 3 hours. You understand? I came from the 3-hour time frame. The distance from here to there has to be 3 hours. You understand? I'm gonna refer to this specific range right here, right? When I am trading right there. You understand? I'm gonna refer to this when I'm trading right here. Right. So now, what am I looking for within this range? An 8:30 candle, which is ideally this large one right here. I'll mark it out in blue. Wow, price even touched both on Nasdaq. It's madness. Explains the seek and destroy. Okay. Ideally, what do you anticipate? I think I'm just also gonna include this right here. Then we'll make these let's make them like this and then add these, right? Okay. That means now you'd have to be referring here, right? And here, right? That means now this specific range right here is gonna be referring back to here and here. You understand? 8:30 right there is gonna be referring to here and here. You understand? I believe this is after 8:30, right? No, it's actually during 8:30, right? That means now it's time distortion between this 8:30 candle right there and this 8:30 candle right there, right? So I'll mark this out in like this. We'll say this is 24 hours behind, right? $24 behind, right? And this 8:30 candle is 48 hours behind. So price opens, right? Manipulates lower, right? Barely touches that range. Let me just find this. Barely touches that range. You understand? And then draws above, touches this one, and then goes back into the range. You understand? And then it proceeds going higher, right? Guys, it doesn't get any easier than this, right? Maybe when we like adding in like a lot of like teachings, right? It ideally gets confusing because everybody might be getting the shiny object syndrome, right? But the routines are ideally the same, right? The minute you understand all these mechanics, right, how to utilize them becomes very, very simple and very, very specific. You understand? All I did was just go to the 3-hour time frame, right? Mark out a 6 a.m. candlestick, right, from the previous day, and the one from 48 hours behind. You understand? What day is this? It's Wednesday. What day is this? It's Friday. What are these two? They are semi-symmetrical. You understand? It's the exact same things every single time, right? Last week on Friday, we used Friday for Friday. This week, a semi-cycle, for semi-cycle. You understand? At the exact same time, right? If I was gonna take this as an execution, I would have ideally been annoyed because there would be no way I would be tagged in, right? Because price did not touch the candle. You understand? So a little thing I used to ideally do, right, was just do like a standard deviation above, right? Depending on where price is, this high right here, right? I would do a standard deviation below and then shift my PDRA just above like this, right? But price needs to have opened above this standard deviation, meaning there needs to be executive candlesticks before the time hits, if that makes sense, right? This is what a shifted time-based PDA is. You understand? It is shifted one fixed standard deviation above. You're not going to see this anywhere else. You understand? Price, instead of it utilizing this specific candle, it's going to utilize a one fixed standard deviation above it as a reaction. Understand? So what does price do? Drops below, then reacts, right? Does not even touch this candle right here, meaning it did not even refer to it. It was utilizing it of a standard shifted deviation, right? Hopefully, guys, this is making sense. I'd highly advise you guys go watch this a couple of times, right? Take notes, and we can go deep into this in tomorrow's live stream, right? But this, guys, this is the model right here. Plain, simple, and stupid. Do it enough times, it begins to make sense, if that makes sense, right? But yeah, guys, with that being said, hopefully everybody has a good day. Bye-bye.